What's going on, everybody? Blake here at Trade Tracer. As always, none of this is financial advice. Trade and invest at your own risk. We're going to go ahead and get it kicked off here with the S&P. And as you guys know, these videos are designed to help you get prepared for this week's trading and give you kind of my market sentiment and outlook as to what I'm reading in the market. So let's get it started. So the S&P, you can see we've been in a bull market, and these past really week has been really volatile. So you can see this past Friday, it looked like we wanted to come and close above Thursday's high, and this whole week was extremely volatile, guys. So even though we have an uptrend, we are still below the 50-day moving average on the S&P, and we're also below the 200 SMA on the Nasdaq. So even though we are in an uptrend, you can expect things to be a little more difficult than they traditionally would be in the types of uptrends where we have, price above the key moving averages with momentum moving higher, right? Same thing, price above the key moving averages with momentum moving higher. So when we have these massive, volatile weeks where, the S&P, comes, screaming down, and then you have a consolidation phase where you just whipped around, and then finally you break into the cloud only to sell off Thursday and Friday to end the week, not on the highest of notes, right? So ideally what we would have liked to see Friday's close somewhere near the highs of the week. Now if we pull up a weekly chart, you'll see what I mean. We came up, tagged the top of that 10-week moving average, and then just got rejected and sold off. So the last thing we want to see is us break last week's lows and then break below the 50-week moving average. If that happens, once again, like I said, all bets are off at that point, because then we got to start thinking about preserving capital and potentially entering into either a digestive market where we just move sideways, or the higher probability, if that happens, is we enter a bear market and we have a prolonged period of difficult trading, and gonna have to be creative and come up with ways to preserve capital and raise capital when we're in that type of market environment. Now, I'm not predicting that yet, but like I said last week, we have to stay open to it. It is in the realm of possibilities, and we have to take a probabilistic approach to trading. So right now we have to give the benefit of the doubt to the bulls, because we did hold this 10 SMA, and I'll make it nice and clear for you. You can see this 10 SMA now is moving higher. Friday we pretty much tagged that 10 SMA, bounced, and then at the end of the day we sold off to kind of settle in. We have to give the odds to the bulls because we're in an uptrend, but like I said, things can be not as easy as they typically are because we're below the 50 and also below the 200 day on the Nasdaq. Until we can get above those key moving averages, I'm going to be playing smaller size, going to be playing more cautious, going to be taking profit quicker until we can see price get back above that 50-day moving average. And even if we do get back above there, unfortunately, these higher time frames don't look great, and we have to be prepared for it to roll back over again. All right, so what am I looking for this week in the S&P? Well, first off, if we close below Friday's lows, that will be no trend, and once again, we'll be back to preservation of capital mode. So we break Friday's lows, you know what to do. Preserve capital, year-to-date gains, wait for the next uptrend if you're a swing trader. And on the upside, what I'm looking for is if we can break Thursday's high. So on the S&P, if we can get above 452.97, call it 453, I think that sets us up well to close this gap from that Wednesday to Thursday. So we probably likely close that gap if we can get above that 453, which takes us to 455, 456 area. And I think if we do that, I think we'll probably have a shot at this 50-day moving average right around the 460, 461 area. So above this 453, initially I'm targeting this 460 area. And below, Friday's low, once again, it's risk off and preservation of capital mode. So it's a really simple game plan. Above Thursday's high, you can add long. Below Friday's low, time to preserve capital again. So very simple game plan. What are we going to be looking at this week? Well, your ARK funds. It's not what I'm looking at, but I do want to bring these up. These ARK funds are just completely just being demolished, right? So these are your high, momentum, high growth names, and I think this can continue to go lower. It does not look good. There is a bear market in many of these different segments in the market. The small caps are in a bear market. These high growth names are in a bear market. Crypto's in a bear market. Meanwhile, the S&P is only down 7%. So you gotta really take it one day at a time and be prepared for anything. So long story short, I'm not looking at these ARK funds because this just looks absolutely atrocious. I will not be picking a bottom. When they do bottom, you can almost guarantee we're going to be taking advantage of this. But for the time being, it's the boring stuff. It's the banks. It's the energies. It's the oils, right? So it's we're coming back to the well again. So you can see, XLF did trigger for us above, what was it, Wednesday's high. So Friday did trigger. Could have taken this long on Friday. And I think, banks do get back up to this, previous high. So keep a close eye on XLF. I think this is well within reach. Keep a close eye on that. Oil, USO looks phenomenal as well. The issue with these names is, like your USO, your XLEs, your Halliburtons, your XOMs. I mean, yes, these names have worked for us, but they're getting really overbought. And I'm not an RSI guy. I'm not a stochastics kind of guy. I trade momentum and price. Overbought can remain overbought, but you got to think at some points, some profit taking does happen where we get a better entry. Maybe we come back into this cloud again, sets up to go long. Admittedly, you probably pulled out of XLE too early in the investment portfolio. We could see some more allocation into that. It's tough psychologically now, as you guys know. I mean, we were in it, we got it. We were in for a little bit, we got out, and it wound up taking off. It's okay, that happens. I don't want to chase it up here. I'd rather stay conservative because we don't know what the market's going to do, right? We're still below a declining 50, 200 day on the NASDAQ. So we're being conservative. And, gold is still kind of just in this range, in this wedge. So, it hasn't done anything wrong. We had a phenomenal setup with this price getting above this anchored VWAP, above this downtrend line. Got everybody excited. And then the next day, just boom, right? So I'm not out of gold yet. I think this is still a very strong hedge. And, if we go to the higher time frames, this thing looks ready to explode. So, I mean, this is a massive, base with a huge cup and now forming this handle. And, if we can get back above this VWAP again, guys, I think, we're set up for a measured move. And I mean, like, a large extended move for gold. So that's why I didn't get out of gold when we saw, it kind of, sell off when we got into that position. But I'm not scared out of it yet because I still think that it's a wise decision to have a significant hedge in the market right now, just because of where we are. Things are very uncertain. And, I also think gold has a really positive setup. Like I said, the longer term time frame, this thing looks ready to rip. And if equities start to slip, which, I mean, we all know that is a possibility, then I think you're going to see money flow into gold. Bonds this is not where you want to be right now, right? So bonds are in a major downtrend, and this is price weakness confirmation. It looks like bonds want to go lower too. So if you can't be in bonds, you can't be in equities, where else are you going to go? Likely commodities, which is your oil and which is your gold. So we're going to be paying very close attention to those this week. And, ideally we need a group of these previous leaders to step up. We need to see a handful of these stocks as opposed to just Apple leading or Amazon for a day. We want to see these mega cap tech names, a group of them. We want to see Google, Tesla, Amazon, Facebook, Apple, and Netflix. We want to see these names all together start to lead. And right now, all of those names, for the most part, Netflix looks terrible, Facebook looks terrible. That's a big part of FANG. And you got Apple that's leading. Google's trying to lead. They gapped up and crapped, and it's ugly right now. Okay, so point being, you want to be hedged. We want to be cautious, and we are, right? We're definitely positioned for it. And this week, like I said, it's a very simple trading game plan. Above Thursday's high, you can add long. Below Friday's low, it's time to preserve capital and cash. So hopefully, this past week, you were able to get long with me when, I posted, hey, we're above the 10 SMA. Had really 3 great days to get paid. We got paid very nicely. Scale, move your stop to your entry. And if you got in back here, you didn't get stopped out. If you got in a little bit later fill, you're probably stopped out by now if that was your trade plan. So, yeah, very simple. Above Thursday, add long. Below Friday's low. Time to be cautious. Make sure you are allocating properly in your longer-term investment accounts. Be open-minded. Be open for anything. See you guys on Monday.